what I'm going to do is let our panel, distinguished panel, introduce themselves, and then we have a few key questions to get to.
Thank you. For those of you that didn't hear my spiel earlier, I'm James. I run the financial crimes risk management program for Scotiabank. What does that mean? That means it covers 14 countries. It covers all of our capital markets, all of our correspondent banking, trade finance, commodities, investment banking, corporate banking, and as I said earlier, anything else that they'll throw my way, I do. So that's really me. Manash?
Hi, I'm Manash Banerjee. I work for Nomura. I come from the technology side of the house. So I manage client technology, which essentially means AML, KYC, onboarding, all of the operational processes that goes to onboarding a client. On the back office side, including client data, and on the front office side, sales and investment banking, corporate access, anything that's client-centric.
Yeah, my name is Christian Brugger. I'm running client solutions for Fenergo. Basically, my background is working on a vendor side, doing implementations, doing pre-sales, that type of work, POCs, working with clients. Been doing that for longer than I probably would want to admit. But I've also worked in other entities like Thomson Reuters, Refinitiv, as it relates to maybe the data side of things, managed services, as you might remember. And before that, I was at HSBC. I was a KYC manager, Six Sigma practitioner, operations, all that kind of fun stuff. So,
great.
Yep.
Thank you. So obviously, excellent perspectives. So my first question, gentlemen, what do you consider the main scenarios which technology can help FIs? And I know that's pretty broad, but to combat the financial crime, the money laundering, and the fraud, there are scenarios now where some banks, FIs, are maybe combining their fraud and AML. So kind of this is a basis for the question.
So I'll kick it off, I guess. So I think in this particular space, it's not one piece of technology that solves everything. There is no such thing. It's lots of different things that goes to get plugged in to create a solution that addresses a broad spectrum of these problems. So of course, you have your normal candidates, like you need on the operational side, you need onboarding tools, you need KYC tools, you need rules engines, you need policy to go with it, you need access to data, you need doc AI if you're trying to be more sophisticated on how you're processing your documentation and getting efficiencies around your process. And then on the other side of it, you need a continuous AML monitoring, negative news monitoring. Those are the things that that we would normally talk about in this space as technology, as relates to technology.
Totally agree. So, for me to elaborate more on that, what I've seen over the years is the technology is enabling the staff to not necessarily just check boxes and say, when the auditor comes in, did you do X, Y, and Z for this particular record that we want you to prove to us? It should be enabling the staff to not have to waste the time on all that manual effort, so they can spend more time analyzing to make sure that they have the risk appetite has been taken into account and they feel comfortable with this client. So on one hand, to your two sides to this, you got the onboarding side where the technology is trying to help the banks themselves focus more on analytical type of work. And then on the monitoring side of things, also in addition to ongoing screening or corporate actions and being alerted to the fact that there's a new director on this particular record, for instance, there's also the behavior of the client within your organization, such as transaction monitoring, and a lot of fraud comes into that element as well. So it's that being able to mine the data and having that data in the right place so you can make decisions on it. I was listening to the earlier panel before this one, and they also spoke about that, which I thought was interesting. Yeah.
Can I mention a little bit? I'm just going to take people on a little bit of a journey that we've gone at Scotiabank. And bear with me, I'll get there in the end.
I got plenty of time.
Thanks, Christian. So what we did is we basically spent 5 years remediating the program, getting it to, out of paper files, getting it digitized, making sure that we remediate our entire book for KYC, making sure we build the right rules, make sure we sort of mitigated and resolved all the regulatory issues. Now we've done that, and we've got enough different jurisdictions to play with. What the team that I've got now, what we're doing together, is looking at moving from a 1, 2, 3 year refresh into a 1, 3, 5. Okay, that means that it gives us the ability to less touch time with our clients, and I think that some of the later questions will come onto client experience, and it does impact that quite well. But also, it's allowed us to start playing and tinkering with new tools like ongoing negative news screening. Okay, whether it be Factiva, whether it be quantified, whether it be RDC, sort of whoever you want to be using, be able to use that and then demonstrate to the regulators the more ongoing controls we've got. Okay, and things like I want to get to real-time KYC. I'll be honest with you. There's a wealth of information outside the bank that I think we should be tapping into, and we're starting to do that. There's things like Orbis. There's the beneficial registry, ownership registries that are out there, so we can tap into those sort of things. So I'm wanting to be able to get all that information, demonstrate to certain regulators, and we're starting in APAC already at 135, where we're going to get all that data out. We're going to leverage those tools, and it means that eventually we should be getting away from this really old school sending out requests for information, asking, all that sort of jazz. That's so 2005. So realistically, we want to be able to move into continuous monitoring, continuous KYC, and monitoring. And later on, we'll talk a little bit about contextual monitoring, because that's where it's all going to come together. Okay, and that's a very useful thing. So I think the question around what technology do for a bank to fight financial crimes, it can revolutionize it. It can mean we don't have to rely on our clients so much, and we can actually go and get the information ourselves. We can balance that up against things like customs house information that we're getting in the public domain and seeing what people are actually doing versus what they tell us they're doing and stuff like that. So it can make massive differences.
Yeah, I mean, that idea of refresh is a killer, right? Yeah. Because you're constantly on your back foot going backwards to try to figure out. So yes, if technology can make it so banks could be on their front foot and trying to stay ahead of what innovation's coming at you, because there's so much disruptions happening these days. Those disruptions and then the response of regulators to these disruptive events in the industry make it for the big banks, well, and all the banks, quite frankly, to just constantly be chasing their tail. And I mean, I've been there, right? You've seen large organizations in Poland, in Eastern Europe, and in India, where they have these massive amounts of people that are just doing refresh. And in the end, when you look at the records, they're not that great,
no.
Right? So it's definitely a problem that has to be addressed.
You're constantly, build the 10-foot wall, and then there's the 11-foot ladder, right? Yeah. As it goes over. So along the same themes, I like to say, how do you avoid creating a safety threat for both the organization and customers by being overconfident and complacent in the risk process? So I think you can probably maybe interpret overconfident.
And complacent.
James.
And this has been touched on earlier, I think, a little bit, but it's worth sort of reiterating or sort of going over that ground again, which is that there's, as I mentioned, I'm wanting to get to a place where we can rely on our vendors, all right? Use all these different technology and new tools to be able to do things. Now, that's a double-edged sword, because there is also complacency. And I'll be honest with you, and I know you mentioned Refinitiv. I'm not naming Refinitiv, but it's Refinitiv.
They don't exist anymore.
There you go. There may be a no. Basically, there are lots of vendors that we're out there, and they are known to be the gold standard. They're known to be like the golden source of information. Now, I'll be honest with you, when you actually kick the tires on some of these vendors, it isn't. Okay. Now, there's data sets that I know have not had the right information updated at the right time. The regulators don't care. I mean, I couldn't hide behind, say, oh, well, check, did this, or it didn't have it on there. They really don't care. And I've got to be careful how I say this, because it's probably NPSI information, even though it's resolved. There have been times where regulators have hammered institutions for the controls they put in place on their vendors that then identifies there's problems with those vendors. Okay, now that is something to be very mindful of. And there's less and less appetite from the regulators I deal with, which is all the scary ones within reason, that A, you should know what's in that black box, but B, you should get comfort that they are reconciling their data at the right speed, that all the right information's there, there's nothing being lost, there's data lineage, there's all the data quality and sort of data governance around it. That needs to happen. And my worry is that I've fallen into this trap. We get complacent and we feel we've got reliance on a particular vendor or data set or something that we're using, and it's wrong. And that's a really scary place to be, especially considering theoretically, if it was, say, a sanctions list, you could be, there could be a big pile of payments that have gone through your filter without even knowing it. And it's because we relied on our vendor. We got it wrong.
So how would you, when you're relying on the vendor, we all do some semblance of due diligence on the vendor and we know what the ones are. So, how do you keep everyone on their toes, so to speak?
There's a few different things we've done. One is that we request all of their independent audits. Okay, we want to know what controls they've got for being able to reconcile their data. We also do our own reconciliations. So it sounds a bit silly that you pay a vendor for a data set and then you have a full-time member of staff reconciling that data, and basically why didn't we just go and get it ourselves? But as we do it after the fact, or we do it on, say, on a quarterly basis, we'll go and get all of the, say, OFAC entries, and then we bounce it up against the list. We see when they went on, whether they were actually put on but to the vendor's data set at the right time, if there's anything missing, and then we show that we're not only relying on what controls they've got for reconciliation, we do it as well on top of them. Some places also run 2 data sets. So you'll see some places will have, whether it be LexisNexis or, say, Dow Jones, and they'll also have Refinitiv, and they'll run both of them to make sure that they don't have anything being missed.
So I'll draw some parallels from, I used to work in market risk before, and it's very common in that world to have the front office risk engine be independent of the market risk engine. That way you have 2 separate engines acting on the same data set, computing the same number, using their own models to see what the back test on them is going to be, right? This is sort of a similar thing where you have same data set coming from 2 different vendors, and you're trying to match them off to make sure, and you give a quality rating to one or the other over time as you do your due diligence, and then you sort of rate them 1 and 2 or whatever, right? So I think that might be a model we might be headed towards if we get to a much more automated sort of way of processing this data.
Christian?
Yeah, my mind is going to the word complacency, because the question is, why would that even exist? And what occurs to be over my experience and having worked in banks is complacency comes many times when you're trying to meet your competitors who may or may not be following the rules the way that they probably should be following the rules, right? So I remember a little while back, the old idea of sub-accounts and had, the managed funds and whatever you call it in capital markets. They were running on the street between investment managers and, right? Why? Because some of them weren't even doing KYC on the funds. And what does that even mean? Or they were sending they weren't even the real names of the funds that they were storing in their sub-account. So that complacency can come into just trying to stay with the competition, because clients are looking for speed and convenience these days, and regulators are trying to respond to the innovation of the new technologies that are coming in that are going to give the clients the speed and the convenience. So who's going to win that race? Is it going to be a big bank? Is it going to be the small banks who might not be able to get in just because of the regulations? Is it going to be embedded payments? Is it going to be something that's not even a bank? Is it banking as a service? So I realize I'm not answering the question, because I don't know if there is really an answer to it. But I'm just kind of thinking about it and saying those are different phenomena that you see, and it's going to be interesting to see how this pans out over the next 5-10 years for banks particularly.
Definitely added more challenges, right? When we started even talking about, FinTech and some of these private, yeah, okay. So how can, and again, we wrap around and we approach these from different angles. So how do you feel that FIs can improve the end client experience, right? Process improvement versus control policies and procedures. So, James.
I'll kick off again. For me, I think we need to be smarter about what we're going to them for, not just, as I mentioned earlier, like what information we're getting from them, but what are we trying to get out of it? What I mean by that is sometimes we go out for a credit, sometimes we go out for KYC, sometimes we go out because we want to, do a compliance call. Sometimes it's more to do with getting a lead or doing some other piece. Now, we should be bringing that together. Now, the first thing is having an RM that owns customer relationships. I think that's important, in my opinion. I think that realistically, one of the holy grails I'm going for is when we go and do a credit, we also do KYC, because let's be honest, why should we be extending credits to people that potentially maybe, people we can't get the money back from? If you find out that they're sanctioned or if there's some other, nefarious thing going on. So for me, I think realistically we should use all of those technology strings, bring them together into one, sort of customer lifecycle management monitoring tool. That kind of, like you said, there's no silver bullet, but that's the kind of the end game we all like. to be able to then mean that with the touch time is a lot less, and we're not going to them for stuff that we could have gone and got ourselves, because that annoys a lot of clients when they're like, look, you could go and get this off our annual return, or you can get, it's silly.
So I think, my conclusion on this question is it's mostly a process issue. It can be enabled with technology, but mostly a process issue. And the reason for that is if you think of onboarding a complex client to a complex product, then you really need front office, you need onboarding, you need KYC, you need the compliance folks, you need legal, credit if it's an OTC product, requires limit, you need settlement. You need all of these people to be working in tandem. And of course, these people don't naturally talk to each other in one horizontal business process. And then you need one face-off to the client. So this is what needs to happen to coordinate this process. So for example, in our firm, we operate very regionally before. And what that meant was we would talk to BlackRock in 3 different regions, ask for the same documents. In every single region, we refreshed them 3 separate times and whatever, right? Of course, that made BlackRock very happy about it, but I'm just joking. But I think, having global policies is like super important, because once you have that, you've negotiated up front, in the upfront contract with the client that, hey, we're going to share data globally, we're going to service you better, we're going to go across legal entities, you've crossed a major hurdle right up front. So otherwise, you can't share documents, you can't share AML stuff that you've already done in one region with another. So those are real hurdles in the process. They have nothing to do with technology, really. It's very easy. Actually, it's much easier in technology standpoint to share everything with everybody, right? But that's not the real world. So you kind of need all of those controls in place and the contracts in place to enable the policies, which makes actually the client experience a lot better on the other side of it.
Yeah, I agree with that. And sometimes you also have a tension in there that you can't share because of regulations. They'll say, no, the documents must be in country. So what do? You put it in the inner office mail? No, that doesn't exist anymore, right? So, but to play off on that idea, if you move it to technology, I can tell you one thing that has burned me on projects in the past is the concept of design. You got to design things for end clients properly. And banks are typically not very good at designing things for end clients. And the issue with poor design is adoption. You could put, the biggest mistake that I've seen people make in doing projects that involve end clients is to assume that an end client will perform a task on a system or a portal that is the same that what an analyst would have to do when supplying it, because it makes it easier for the staff who receives it on the other end. You get no adoption, they just start emailing the RMs or whoever the banker is at that point in time, the whole thing just starts to crumble. And then obviously nobody wants to invest it in anymore because you lost so much money. So I've seen that multiple times happen, and it's kind of infuriating because you can see it coming, especially within regions. So if you're in certain countries and you think you're going to send them an SMS message that says you're going to authenticate into a portal on a mobile, and they don't have mobiles. They don't have those types of mobiles. It doesn't work, and it goes back to adoption. So that's probably, for me, if I was going to say one thing, it's the adoption and the design.
Yeah, I think cloud helps a little bit here as well, because initially it used to be that the Singapore authorities would say, no, you can't move anything physically, right? You gotta be. So now you can actually replicate content across the cloud. You can have multiple points of presence. So all of those technical problems are actually now very solvable, much easily solvable than it was before. The other thing that's a corollary to all of this is, I know it's a very boring topic, but unless you have a great data model from a client data standpoint, you cannot achieve any of this. It's not possible to do it. So I know it's a very sort of a corny thing to say, but it's really, really important, because otherwise you can't implement the right entitlement rules and visibility rules and all of those things that are important to carry this off in a global fashion across all of these different departments in the bank that we talked about before.
So, thinking about this as overall, the overall risk management, we all hear the term silos and different things, and, working with, obviously, the client-facing versus the risk folks, and I use that in a very general term. So, and that's always a challenge, right? And, hey, could you follow up? Hey, can we do this? And it does become challenging, to say the least. So, which technology technologies do you see being used in the future to improve KYC AML experience for FIs? And we all know, we all think of the, what do we need now? We've already alluded to some of that. But if maybe you expound on that, Manash, if you want to.
Sure, I'll start there. To be quite honest, I think it depends on which area you're trying to attack. Okay, it's not like a unilateral answer, right? If you're trying to attack the operation. So one of the issues in this whole space is, even when you have this best CLM workflow system, whatever that is, there's a lot of stuff happening on email, and you have no visibility across it. And I'm sure your front office partners are ecstatic about it, right? They're not. But anyway, clearly this is a
It's a tough crowd.
it's a tough crowd. I'm trying to also, if this was a ship, we would definitely lean over on that side, So, but anyway, I'll move on. So I think those collaborative tools, which are much more strongly typed, or regimented. Some of this workflow is just, very arbitrary. People call people because they need something at some point in time. So you need that routing kind of ability, almost like a chat-like, routing ability. However, not to lose the context, right? That you're working on a case, even if you're sending emails, the case is going around and the context is getting passed along. That's kind of really important for us to build this, view of where are we with the client? Who is this with? Who holds this ball right now? Because most of the time, that's where all the noise is internally when you talk to front office and you face off with the front office. So that's one area where we could improve with software. The second thing, has nothing to do with software. I think in the security world, in the product data world, in the instrument data world, it's just standard sources of data. Everything's become very data driven. So actually having better sources of data, even though we've been at this for a while, LEIs have certainly helped. So I think that's good. But that whole process needs to get better, much improved. Hopefully regulators are going to step in and, just like Singapore authorities have come and said, we're going to have a central registry of this stuff. UBO would not be a problem if you had a central registry of stuff, right? But we don't. And that's part of the issue. And hopefully there'll be a combination of regulators or people like Market who have stepped into sort of the central authority role in the OTC world will come in and provide a solution that's going to solve some of this. That's, I think, the second thing. Third, I think we've talked about sort of having consortiums before, and they've all failed, terribly. And you seem like you were part of some of that. But it's a tough problem, right? Because when I looked at this problem, it was sort of like, well, where's the monetization here? Like, who's benefiting from this? Nobody's going to give the AML data to a consortium out of the goodness of their hearts. It does not work that way, right? So the one answer that I came up with, and I don't think it's a great answer, but was, okay, well, what if there was a private blockchain of banks, and each bank, let's just say, I've KYC'd ABC Inc., right? And I can put on a private blockchain. You can buy it from me. There's a contract on the back of it, and then I get to monetize some of that. Then there's some value proposition for sharing the information. And it's a interchangeable, no middleman involved kind of shareable model, completely based on technology. So somebody's just keeping the technology alive, and it's pretty much open source anyway. So I think that kind of a model has some place in the world. It's hard to pull off something like that because somebody would need to take the initiative. And then the big banks are not going to play, at least initially, right? So it's going to be a bunch of mid-tier banks who are going to have to source this thing and play in this consortium. Which is completely technically enabled, private blockchain enabled, and of course with smart contracts in the back of it that could actually provide an answer in this space. So that might be a way to go, for the future, so that everybody's not doing the same thing over and over. Because at the end of the day, 80% of our counterparties are overlapped, right? There's not that many investors in the world. So if you've KYC'd a hedge fund, we probably are already, and so why do it twice or thrice? Now you could always give a rating to the KYC that you buy, so that everybody else knows sort of who's a reliable bank, who to buy from. So over time, you kind of build this network, which looks like more of a social network of KYC data.
But how would that work? I mean, how would the reliance work? Like, if I come to you and a regulator then comes into my institution,
we would not rely. We would simply get the data. We would re-verify it. but at least we would not have to start from scratch. So at the end of the day, as you know, the regulators, it doesn't matter where you got the data from, they hold you accountable, right? So you own the accountability either way. So you can get the data and shortcut the process of sort of having done some of that due diligence, because I'm sure everybody's doing a decent process. If you have a favorite bank on the blockchain where you go get information from because you think their quality is high, you could start there. You still have to do your checks and make sure that you stamp it from your policy standpoint.
I think you're going to have issues with verification, though, because otherwise you're not, the value proposition diminishes dramatically.
It's not a perfect solution.
Yeah.
You know, I told you up front, it's not a perfect solution. There isn't one out there. But this is the only one that I could think where, you know, a big middle entity didn't have to step in. You know, it could be technically enabled. I'm sure there's more to be thought about.
Well, there's one in Canada that they're actually doing for cap markets. I think it's mutual funds. And it's actually being spearheaded by the Canadian government. So the regulators are getting involved and wanting it to happen. That's one of the few times that I see it working. Like I say, Market tried it. I helped advise on that many years ago, and it didn't really go anywhere.
Well, it did go somewhere, only for a few very large institutions. Exactly.
Yeah.
Did you really think, I mean, obviously, there are not that many FIs in Canada as there would be here in the States, and I'm just not sensing the regulators would.
Oh, here?
Yeah.
Well, no, I mean, this is.
Maybe.
There's a few things. Project Rose is going on. I mean, some of you probably know about that. That's where there's a few banks are getting together to basically say, let's do sanction screening collectively together. Okay. Which is good. And they have got to be careful how some of this is sensitive, but the Treasury are going to the table to talk about it and say, yes, we are interested in that. And some of that is coming out. If you look at the 2020 AML regs that came out,
right.
Wanting technology, FinCEN, some of the stuff that they've released on it, MAS have released stuff. So there is appetite for it. And I think, as someone mentioned on an earlier panel, that examinations are getting more digitized. And so, in a way, the more that they can get those things in one spot to be able to measure, it actually makes their job a lot easier.
Okay, good. Christian.
Yeah.
It's like
So
calling out a
in terms
student.
of that, you guys touched on it, right? The problem is truth. What is truth? Who do you rely on for the truth? If you could rely on something for the truth, let's just say it's a blockchain or a private blockchain or a smart contract, whatever the case may be, you wouldn't have to move the data and the documents over and over and over and over again and key it into multiple different systems and then have nice conferences like this with a bunch of different applications. But what goes through my mind is, are banks actually going to solve this problem in the future? Or is it going to be something else that solves this problem in the future that banks look at and say, if we did it that way and conformed our industry to that, as opposed to trying to build something that conforms all the complexity of non-global policies and regulators and all that stuff, which makes it's like squeezing Jell-O. It's almost impossible. And in my mind, it's almost like the anecdote I would give is I remember the days of Garmin GPS systems that you'd have to buy, right? And then you had that big thing that you put on your dashboard with the still thing, and you have to plug it in there, and then you'd have to update the software. And then, lo and behold, Waze came out. And I remember looking at Waze going, that's kind of cool, right? So, but I would only turn it on when I needed to go somewhere. But,
Or you're stuck.
or, well, my kids get stuck because they can't get anywhere without Waze. But yes, I know the Long Island, I can get around. But now it's on all the time in my car. And the question is, why? The answer is, people hit a stupid button and let me know where the red light cameras are on. So now I'm using a technology all the time to navigate where I've driven all my life because I'm getting another benefit out of it. And that's actually what I kind of see. And I don't know what it is, but I kind of see something like that happening in this industry that really disrupts. And another higher type of solution just kind of absorbs this and changes the way it is. So
I think, the argument is correct. However, there's been a lot of talk about mutualization benefits of multiple firms using a piece of software. And honestly, that's not materialized. At least we've not seen the benefit of it. Because the policies are unique enough and nuanced enough that you can't quite mutualize it well. Or at least the benefits are not tangible.
Mm-hmm.
But I think you said it earlier, the cloud is going to help. It might not solve, but it's going to help. The idea of being API first being able to have a very configurable type of ecosystem where all the different vendors who specialize in the different areas that you might be attacking have a way to exchange within that technology framework, that's going to make a difference. And that is a big difference in the last 2 years. Right?
So I'll just say this as a technologist, in the panel, but I think the most important piece of software that's required here is a very, very solid piece of middleware and a generic workflow capability. And I don't mean that in a standard workflow tool capability standpoint, but because that's the glue that's going to hold 50 different things together and create the appearance of a contiguous system. And if you don't have that and you don't own that, as a core piece of technology, you cannot really enable the stack other than doing lots of swivel chairing between various different applications. And that's kind of where everybody is in some shape or form, some better than others, but I think everybody is in some shape or form is in that space. And we're really trying to enable that.
Good. Your thoughts anymore?
I think they covered it.
You've asked the question and you got the good answer. So right now we're going to take questions. Hopefully, he's right here. Yep.
Yeah, it's a microphone.
Thank you.
I was wondering why you didn't mention open source or like new behaviors, like analytics. You don't see that future, or?
Yeah, yeah. I mean, for me, yeah. I mean, yes. I think the more so there's a couple of things. So I think the more data is outside than inside the bank. So the more that we can go and actually gather that is much better. All right, there's much more information out there. People's digital footprint can tell you a lot more. If you go to the retail level, you can tell a lot more about criminals from what they do on their Facebook, to be honest, than what you do on any, than any account activity review.
Google.
Yeah, exactly. And so I think that's right.
Instagram.
Yeah, a lot of the time people have put it into the investigation phase and said, right, now I've got something, let's look at all that other stuff. But I think actually the way I'm wanting to do it, when you mentioned earlier about contextual monitoring, that should go off. So if whatever trigger happens, we're watching everything. It's like the Palantir type idea about the all-seeing eye, being able to sort of monitor all those different things. And when we see those sort of things and we see those sort of behaviors that are indicative of something shady going on, that we can pull that off, and almost having an alert generated, say, from the fact that you post with a whole bunch of stacks of $100 bills. Do you see what I mean? Because there's human trafficking. There's most of the human trafficking that seems to be done in recent years, especially during COVID, has been done through social media and things like that. Right. Now, that's something I care about a lot. After hearing about the things that are going on with Westpac and stuff, that is one of the main reasons that Scotiabank has been spearheading a big things, Project Protect, Project Shadow, and things like that. But you're right, that's where we're going to get it. I think it's a smart thing, and then using analytics to really say what it looks unusual or what have we kind of seen before. I'm really fed up with rules. I'll be honest with you, really fed up with it.
Just one thought about Google, I was on one event in Massachusetts and they say like, what's the future, how Google see future with cryptocurrency, Are there like KYC process somewhere? No, we don't need that. We already know everything about everyone.
Yeah.
We don't need IDs or selfies
It's true, yeah. It's scary. Yeah,
Clear
Alexa
view.
knows more about my banking than anyone else does, probably.
Right. Clear view, right? Your face is everywhere for everyone to use. Any other questions?
Yes. This question is more geared to Manash and James. Sorry, Christian. You're my colleagues, so I'll spare you the trouble. So the reason why I direct this question to you both is because you're still on the business side of things. Christian and I were at one point in the banking world, but we hit on the fact that regulators are relying on us to get the correct information, right? And if we don't, we get fined. And we also touched on harmonizing data and which will be the golden source and who will that be? James, you hit on a vendor providing incorrect data. But are the institutions today, why are we not putting pressure on the regulators to provide the data, a harmonized data and correct data that we can tap into? So Christian hit on API first. The FCA, FINRA, they've started launching API capabilities where you're able to plug into the data. So why are we not putting more pressure on other regulators to start providing those connection points so that all institutions are synced to the same data? So if an institution loses their regulation status and they're no longer regulated, we know what that means. You're going from low risk to high risk, right? We always want an entity that's regulated because it's the easiest, we get them in the door, low risk. But why are we not putting more pressure for the regulators to start adopting technology to become API first? Because it's only more money in their pocket, right? They're going to be making money from you providing, them providing you a service. But also, if not putting pressure, are you today utilizing these API connections to these regulators that are using the capability?
Do you want to start?
I don't know, but I assume that this is not a trivial problem. My bet is if you look a decade out, they're probably thinking about it, but the data landscape is not clean enough. Like, they would have to collect a lot of data and analyze a lot of data and put a lot of technology on top of it, which might be the easiest part of the whole deal, to actually enable something like this. It's much easier to do it.
But they already own the data, right?
So
a registration status on the Finner website, that's their registration status, right? If you're delinquent on whether it's your certification as a broker or an institution, they own that data, right? They're liable, right? We're just manually going on a website, searching their registration status, but we're not doing it continually.
I think you're missing one part of it. In the US, there's so many regulators. When you say regulator, you mean like it could be anybody, It's not like those systems are concorded. Yes, it's out there somewhere, but they're not concorded. So unless they're concorded, they can't give you this, golden source type answer, which, gives you a nice binary yes or no. So that's what I mean. Like, the data's out there for sure. They have it. Do they have it digitized? Is it in one system? Are they concorded? Do they have a plan for it? I think those are all important sort of things that need to be worked out.
Yeah, I mean, but from a Scotia point of view, we do continually ongoing scanning for basically anyone that should be registered, whether it be an MSB, whether it be securities or anything, all the time. Okay, we make sure that we're only doing business with people that are appropriately registered and licensed. I think when it comes to the API stuff, we're not really big enough in a lot of those jurisdictions, like in the US, to actually sort of have economies of scale to really do that. But we've got vendors that are doing our negative news screening, and part of that is screening for licenses. I want to know, has someone got it? Has someone been denied a license? Is really what I want to get to. Has someone, is there something out there that basically means that we should probably be thinking about why they can't be doing the business they are? I also want to have a look at the information about beneficial registries, not just for individuals, but also the, what's it called, like the, where you have registered sort of shell companies and things like that, like in Latvia, or you've got them there's a ton in Hong Kong and those sort of things, and being able to tap into that. I'm wanting to be able to have a look at patterns around that. But as you say, yes, they own the data, but they're in the position to say, well, yeah, who regulates me? Like earlier, there's someone on the panel that was from the Fed, and they're not regulated. They're not examined. Do you see what I mean? A lot of the data they have, there's no real oversight to make sure it's right or not. And I think it would need to be a government body that basically ensures the data governance around those sort of things, but it needs to happen. And it will then allow vendors and even institutions on their own to be able to tap into that data and be able to actually leverage it properly. But yeah, I'll be honest with you, I'm being lazy, I'm going through a vendor. So I put pressure on them to go and get the information and make sure it's right. Does that answer your question? Kinda.
That's the best we can do.
We've done our job.
I think part of it, I think already James and Manash answered. So some of the data which is centrally available, it's already APIs are provided. Like for example, James answered, NIDSB provides all of the derivatives data, it's available there. FINRA provides the data, FCA provides the data. So there is, like Manash told, FINRA is not, that's not the only regulator who is doing all these exams and things like that. If there is a centralized on top of that, then it could be provided. I think as much as possible on the regulatory side, the data is centrally available. DTCC is also providing. DTCC is going one step ahead. They are providing even the consultants to do the job. So whatever the DTCC is doing the checks, they will be able to provide pre-checks for you, like RegHub is one of them. So there is some sort is available, but not entirely is available.
Yeah, it depends on type of client, type of entity. Some are very well regulated and their data is very transparent. Some others are not. It depends on which end of the spectrum of clients you deal with. If you deal with more hedge funds, more family offices, that's a more difficult problem. If you deal with, big fund managers, probably not as much of a problem. So I think it just depends, really. That's the problem, right? The answer is always it depends. There's not a solid answer for anything, which means you have to do it for everything. And therein lies the problem.
Any other questions?
You talked about exchanging information between different clients, like different banks, different financial institutions sharing KYC information. Don't you think that's already happening via travel rule, in a sense that we already share information, right? So I guess it just, we scan the information that we get from different banks about the reliability. You're never going to get to a point where I can say for sure that a smaller bank is doing as much as KYC as a bigger bank, right? But I think, to your point earlier, I just wanted to share that we already have a travel rule where FIs do share information between each other.
Sorry, what is this? I don't know.
Travel rule?
The travel rule. So basically, when a wire goes, it has to travel all the information. You cannot take anything out of it. The issue is everything in a wire, even with the ISO 222 coming out, we don't have anything to say that's been verified. So I could put someone else's name in there. Do you see what I mean? As long as in some banks, as long as the account number works, it goes through. Sure. And the travel rule, theoretically, in its purest form, should be the fact that you don't omit or change anything that's in there. So if it's wrong at the front, it'll be wrong at the end, but you don't break the travel rule. Do you see what I mean, technically? Sure. In Canada, the travel rule has now gone like the US on steroids. You've got to have everything in there. You can't have a PO box. You've got to make sure it's right. The last bank into the country has to go out and get that information, or the penultimate bank, and basically get that information, make sure it's verified and correct, and then add it in. So they're taking it to that level. But the US travel rule, as it is at the moment, there's a bunch of data there, but I don't know if it's validated data.
It's not standardized as
and
you want.
Standard, yeah.
Yeah.
ISO will help.
Anyone else? Okay.
Going.
I think we are done. Thank you all for being here, and thank you to the panel. Well done.
Thank you very much.
Yeah, you're welcome.